Welcome everyone. I'm Julian Gordon, the Vice President of Asia Pacific for Hyperledger, and I'm delighted to be here today for this amazing panel to discuss one of the world's most pressing challenges and opportunities, which is transforming trade and trade finance through digitization for the benefit of all, and the key role blockchain plays in this. As most of you know, Hyperledger is a blockchain project hosted by the Linux Foundation. Through our open source, open governance approach, the Hyperledger community is building the world's leading blockchain code bases, providing solutions and changing the way businesses and in many ways the world works. For trade and trade finance, Hyperledger is seeing exciting blockchain innovation, with most of the leading trade finance networks using Hyperledger technologies. So today we'll hear from this great panel. So the things that we'll cover, probably in kind of 4 areas: where we are today, what are the key opportunities and challenges facing trade and trade finance, the solutions, how is blockchain addressing these, the exciting development, particularly of the Singapore Digital Trade Registry, and finally, what does the future hold? Our call to action to everyone. I mean, not everyone, I mean you as well. So without much further ado, I'd like to meet this fantastic panel. I'll ask each of you to briefly introduce yourself. So, Poi, could you start that process, please?
Sure, thank you. Good evening to all and fellow panelists. My name is Poi and I run corporate trade and financial supply chain management sales for UOB Group based out of Singapore. So under my scope, I cover all the corporate clients from the large MNCs all the way to the smaller SME clients. Okay, over back to you, Julian.
Thank you. And next, Sam, do you want to introduce yourself, please?
Sure. Thanks, Julian. Hi, everyone. My name is Samuel Matthew. I run documented trade products for Standard Chartered. I'm also the lead for trade digitization on the documentary side, running it as a practice globally. Thanks for having me here. Back to you, Julian.
Okay, that's great. Thank you. And it's not Michelle, it's Sri. So we have a slight technical problem there. But Sri, could you introduce yourself, please?
Sure, Julian. Hi, everybody. This is Sriram Muthukrishnan. I look after trade product management at DBS Bank. Similar to Sam, I have a responsibility to also make sure that we foster the sense of digitization across all of our trade products and enable our clients to get more digital. So it's great to be on this panel. Thanks, Julian.
Okay, Sri, and Samir, please.
Okay, thank you, Julian. I'm Samir. I lead dltledgers. We are a trade digitization platform. We are one of the, probably the largest, trade digitization platform in Hyperledger today. I'm really happy to be with known faces in Singapore for this panel today.
Okay, thank you, Samir. So let's set the scene. Let's look and examine the key challenges and I think opportunities facing trade and trade finance today. So I think maybe, Poi, would you be able to maybe kick that off?
Sure. Well, I would say that let's just fast forward to 2020, since it's one of the most eventful years. Now, the business and the trade community has really gone through unprecedented time this year when COVID hit us and the world. So we were facing a lot of client demands as well as requirement when they call out during the time where their factories, their offices were shut down. A lot of them has to be very back to home to work remotely. They have a lot of issues in terms of managing the supply chain disruption, the delay of the sales collections, as well as to help them to find alternatives to send or collect paper-based trade documents to make claim or to pay for their goods and services. Now, the SMEs that we support, which are affected by COVID, also needed assistance in terms of the working capital to tie them through the period. Amidst all this, we were supporting our client to work through their challenges, be it whether it's for funding or for their banking requirement. So like helping them to tap through the government schemes, be it whether it is for the financing or to get subsidies to enable them for some of the digitalization, to enable them to still maintain banking services remotely or reducing the paper flow. So that was what we have gone through to see how, our clients were managing during those periods. Maybe I'll leave it to the other panelists to also chip in the interest of time, or else I can go forever.
So
thank you. Yeah, thanks, Julian. Maybe I can just add in. So I think clearly COVID and the impact and the disruption caused by COVID. But if you were to just step back and look at where trade is as a trade finance is as an asset class, if you look at where margins are, I think they're probably 1/3 of what it was 15 years ago, right? So clearly, margins in trade business has come down. At the same time, the cost of doing this business has gone up multifold because it has always been inefficient with paper, but also the cost of governance and the cost of risk. And this year, apart from the COVID challenges, we have seen some very high-profile fraud cases in this business, especially in the oil sector. So if you put all of that together, there clearly is a lot of challenges and a lot of headwinds. The paper and the manual processes did work, but with margins compressed and cost of doing business going up. And one of the things that has evolved in this paper-based flow is because it is inefficient and paper needs to move over a period of time, especially in the oil business. People have the industry has moved to what we call letters of indemnity, right? To replacing the original title documents with copy documents and documents in lieu, which has then translated into risk going up in this business because of non-title documents. So that, in a nutshell, I would say is the challenges, right? We have efficiency, risk, and at the same time, margins have gone down and cost has gone up. Sriram, over to you if you want to add anything.
Yeah, thanks, Sam. I agree with what both you and Poi have said. The immediate problems that we've had in 2020 have been quite unprecedented in many ways, right? With the lockdowns, for example. Never happened that the entire world or entire cities and countries were locked down. You could have goods arriving in the port and nobody can offload the ships, for example, right? So that is the immediate problem that we had. And then you talked very, articulately about the longer term problems facing trade. But what I find is, adding on to that, is I think trade finds itself in a bit of a dichotomy. On the one hand, we feel that it is, if you look at it as a business, we feel it is the lifeline of the economy. On the other hand, this particular lifeline, if it were an artery, it is prone to a lot of heart attacks and strokes. There are so many impediments to the flow of business and the flow of blood, right? So I think that is the single biggest thing that I would say is the problem. So it is a lifeline of the economy, but we need to really, give it some blood thinners and statins ASAP. And those statins, in my view, is actually what the digitization efforts are. Because the sooner we can get this business to move into the 21st century, or at least the 20th century, it is still caught up in the 18th century. That's the first thing. The second thing is that the way we look at consumer behavior or human behavior or individual behavior today, if I always find this very interesting. If I have to order one T-shirt online, it is so simple. I can go on my app, I can make the payment, and everything is done. And within whatever days the merchant promised me, the goods are shipped, or AirPods or whatever, right? So, however, the moment I have to order 1,000 of these for my business, I go to my bank and fill in a form, and then the bank tells me, okay, fine, now you need to fill in all these pieces of paper. And then when the goods are shipped and arrive, you have to go to the customs and again, oodles of paper. I mean, why is it so different in our personal lives and in our professional lives? That is something that we got to solve for. And I think a lot of what we are trying to do now in terms of digitization is working towards that. But I think we need to move this really fast. And with that comes the sense of how do we make sure that, the small SMEs can also do these things and get the benefit of all this at the same pace as the largest conglomerates can. The largest conglomerates can actually access liquidity very easily. They don't need to use trade finance products, whereas the SMEs need to, because they need to prove that the underlying goods are actually valid. So how do you make sure that that happens in a more seamless fashion? So these are 2 or 3 challenges additionally that I feel, and also opportunities. If we solve for these, we can actually make the blood go faster through the veins and hopefully have a very healthy ecosystem.
Yeah, if I may add to it, Julian, we are actually sandwiched between the seekers and funders, in this equation. In most of these cases, we find that banks need all the transparency to reduce risk in terms of trade financing. But when it comes into the traders or from commodity or any different merchandising products, they probably doesn't like transparency. The first machine which a trader buys is a shredder in his office, so he doesn't want any history to be remaining in terms of any activity which happens as a part of this process. So I think COVID since POE started with it, has accelerated the notion of digitization, which could help both ends come together. A bank could start very early in terms of the value chain rather than towards the last bit in terms of financing alone using a set of documents. So this is going to be extremely positive going forward, and all our learnings which we got in 2020 is going to take us much further. So that's my view, Julian, to start with today.
So 2020 has changed things, it sounds like, considerably, right? But a lot of those issues must have been there before, right? So it looks like things are changing. So I like Sri's example of being a body, right? And that we've had statins and our arteries have been full. We have all these kind of challenges. So how can blockchain help make a fitter body? make a fitter trade finance body. So Samir, what's your so where does blockchain fit into?
Yeah, so we started our journey 3 years back, Julian. We started with DBS Bank, thanks to the digitization drive from DBS Bank, and we later on picked up quite a lot of banks in terms of digitization process using blockchain. The early days, it was just an enthusiasm and trying to do it first, or maybe trying to be the first guy to start off the equation. But today, I find it as a critical component, which everyone is talking about, wanted to do something, and wanted to extract and then use that for better efficiency. Documentations, which get consented within the framework can be used as authenticated frameworks. Of course, we are coming forward with some EBL transactions and all this. So if you leave the EBL side, a full trade can happen from one end to the other end on high seas. The entire process can be digitized using blockchain today, and quite a lot of production applications are running around the globe. And I find Singapore as a very enthused leading nation, and most of the financial institutions are quite keen to do more stuff in terms of the blockchain side. Technology-wise, Julian, we have started with 1.1 version in Hyperledger. We have gone all the way to the 2. We have added more projects, as a part of it. Identity management has progressed quite a lot in terms of blockchain side. So I'm just seeing. Actually, I shouldn't say that, but COVID was a blessing in disguise for guys like us, because we found innumerable number of opportunities, where we could apply blockchain, to make sure that the processes become much more efficient and transparent between the different parties. And I'm sure Standard Chartered and DBS in Singapore has been quite giving up, a kind of lead in terms of, and then the rest of the banks are coming together. A lot of things have happened in the last year, which we shouldn't, even Sriram and Sam would agree with me that on a normal year, you wouldn't attempt to do a trade registry, so a lot of nice things would have happened, so that's my bit on blockchain. Yeah.
Anyone else like to add? I mean, blockchain obviously helps trust, right? So is there that lack of trust that existed before? How is blockchain helping?
Yeah, so my view is that. Sorry, Sam, go on.
All right, thanks, Sriram. So look, if you look at the narrative, just going back to maybe 3 years, and reflect on what role does a bank play today in this entire flow. Now, it is actually playing the role of a trusted intermediary and deploying its capital to take some risk into financing and do the settlement. Those are the 3 roles, right? So when blockchain as a technology, right, with Mr. Satoshi Son and Bitcoin came and people started looking at it beyond the use cases for Bitcoin, I think the going in position at that point of the narrative was, well, we could probably do away with the banks and this public consensus-based system could actually act as the trusted intermediary. So blockchain network could, using a consensus mechanism, actually act as a trusted party. We don't need the bank, right? And then alternative forms of funding, etc., could come in. But that narrative changed over the years, because people do realize that you still need, because going open consensus is not that easy for a regulated industry, and therefore it quickly transitioned to private permission approaches, and DLT ledgers and is an example of that on the Hyperledger fabric, and therefore can something like that solve for transparency and the need for all parties to have a common understanding? The answer definitely is yes. To me, it is a piece of technology, and it is no different, I would say. If I were to go back, an example from the trade, one of the biggest innovations in trade, ironically, came from not trade finance, but in trade, came from the trucking industry. If you look at the 1930s, loading a ship took 15 days to 30 days, because you had people physically putting goods in. And then came the container that actually came as an innovation from the trucking industry, and it slowly standardized, and all the ports of the world standardized, and we could now load a ship, and much bigger ships nowadays, within 24 hours, right? That's the efficiency. It was a standard. So to me, more than the technology, can solve some of the problems, but to me, it's about standardization. Is it going to be a blockchain technology that all parties sign up to? Or even if it is different, how do we achieve interoperability between all these various digital ecosystems, such that from a bank and a corporate perspective, eventually the transaction cost is lower? Because remember, we started with it being inefficient and risky and all of that. We need to solve for all of that, at the same time be definitely more cheaper from a transaction cost perspective. Sorry, Sriram.
No worries. No, I think I just was about to add that trade finance and trade specifically as an industry, right, itself requires multiple parties to come together: the buyer, the seller, the shipping company, the freight forwarder, the insurance agent. There are so many, the customs people. So then there are certificates of origin. There are so many different pieces of paper, and so many different entities need to come together to make a trade. And I think the beauty of technology specifically is the fact that each one, it can enable these multiple diverse parties to come onto a common platform and do their little bit. And whatever they do is auditable, it is there forever, it's immutable. And that therefore you have a sense of trust that whatever has been put into that chain. So I think that is the single biggest benefit that blockchain brings to trade finance. Now, if you were to expand this, there are two ways, right? So one is you can look at it as Sam explained, right? How do you make this whole ecosystem work all over? Is a universal ecosystem? Are we going to look for hyperconnectivity? Are we going to look for standardization, hyper-standardization? And I have a feeling that that will take some time to come. However, even in its most basic form, we worked, and Samir, you will know this, we worked on a few corporate ecosystems as well, where we've not tried to change the whole world, but we try to enable the sustainability and the ecosystem tracking of a single industry or a single corporate and their entire supply chain. And even there, blockchain has been found to be extremely useful. You're able to protect identities, protect information, at the same time create trust and traceability. So these are some of the real big benefits of the blockchain technology. As Sam says, yes, it is technology on its own. There are other things which will go to make sure trade finance survives and thrives. But I think it's a very big enabler, especially in a bigger ecosystem. So that's my view. And that is actually, that should sort of bring us also to the Trade Finance Registry initiative, right? The fact that we are able to bring 25 odd banks in Singapore and eventually across the world to share data in a safe and secure manner, in a way that other people cannot access that data, but at the same time we can get a reference point of whether these are kosher transactions or are they already financed. I think we'll come to that, but again, I think that blockchain technology is one of the best answers to such an initiative.
So So Sriram, just to discuss that point, so the corporate adoption in terms of blockchain towards a bank is bringing the, the financier very, very near to the value chain in terms of the, in terms of the corporate. So, this is evolved over the last 2 years, to see that the banks can go deeper in and come out with more products, which can be delivered across to the corporates. Which is completely a permissioned framework, but at the same time it delivers in terms of transparency requirements, document automation, cognitive frameworks, which is required for that, so that we can look at matching validation, so that we don't have to eyeball at both ends. So there is quite a number of innovations which has happened, which really helps, and I'm going to see. Like Sam was saying, like banks will disappear and blockchain will take over, which will never happen. It's like how we marry these together is where we find a lot of innovation. And I think most of the banks which we work with are trying to work very, very closely with corporates and getting more deeper in terms of the value chain, which is again, I just wanted to add that to yours, Sriram. Yeah, Poi, you should be adding your stuff.
Yes, thank you. And I thought that maybe I will play the devil's advocate's role, since so many good things has already been said about blockchain. And I do appreciate the fact that it is actually one of the mechanism or the tool or channel that enables the trade community to come together, to do a trade virtually without really having to push paper, at the most extreme case. And it technically can connect cross-border, it can connect basically the entire world.
Yeah.
So we do hear and we do understand and appreciate some of the values that such technology can offer. But I think to one of the point that I believe Sam has pointed out, as well as Sharam as well. Trade typically involves many, many parties, just to complete one transaction. Now, ideally, if let's say we can bring everybody onto the same page, that is ideal, that is perfect. But just again, trying to come from an SME standpoint. Now, what we have understood from our client is that typically the SME segment of clients does business with a large pool of suppliers, buyers, as well as they utilize all sorts of different instruments, because they may not necessarily have the best bargaining power, and often the time a deal may be very dynamic. One may be on LC, another may be an open account. So I think the positive spin to this is that if there is a way whereby we can have a solution that enables us to plug and play, as well as to connect with different dynamic combinations in a bigger ecosystem. Of course, I think that is when all the goodness that has been said just now can really come through. But at the same time, and at the current state, how do we then encourage and energize people to believe in that end game? I think that is something that we need to work through as well. Okay.
No, that's interesting, because I think that call to action is something we'll talk about later, right? But for many years people have been talking about digitizing, right? So it is an ongoing challenge, right? So putting people, I think, is key. So I think we heard many things that's fractionalized. That obviously there's great benefits to what we're doing, right? But one project that that we have now announced, that's been announced, is a Singapore Digital Trade Registry. So maybe if you could, Sri or Sam, you could explain what that is to the audience who are listening today, and maybe a little bit more about where you see that happening and how that's going to help.
Sure. So actually, Sam and I and Samir, we are the partners in crime, so to say, where with the initial founding, members of this. So we'll all take turns. Probably we'll take different parts of it, maybe, if it's okay with you guys. So I'll just start off with trying to explain and describe the trade registry in as simple a way as possible, and maybe I'll hand it over to Sam to talk about how it came about and stuff like that, and then Samir can add in. So the simplest way to describe the trade finance registry is basically like a repository of all the trade transactions that are being financed across the industry by various banks in Singapore. in such a way that you can uniquely identify each transaction. You take just enough data to be able to uniquely identify a specific transaction. And what it does is when another bank tries to receive a similar request and they input the same data set into that repository, that registry basically throws back a red flag saying that, look, this data with the unique characteristics appears to have been financed already. So that is the MVP, or the first solution that we have actually worked on together and rolled out and tested it. And we found it that it is really effective in enabling us to highlight the potential duplicate financing. And this was one of the problems to solve. There are others. One of the main problems to solve, as in the current recent issues that the commodity trade in Singapore have faced. And then, of course, what we did was, we have, of course, future roadmap in mind. We want to add on future capabilities such as, provenance tracking, contract provenance tracking, establishing genuineness of trade by getting in multiple data, sources from different, such as liners and other source of information which can prove the genuineness of the trade. So those are the other things which we have in our roadmap. So that is how, and the best thing about this is that it is actually quite invisible to the corporate customer. So the banks continue to provide this data into the repository and get a result, much like you would do for an IMB check, right? The Maritime Bureau check, for example. But the corporate actually doesn't feel a thing. So that is the beauty of this, of the way we've sort of designed this. So that is what the Trade Finance Registry is. And I'll hand it over to maybe Sam to talk about how it came about and how we went about it.
Thanks, Sriram. Look, I think you've kind of covered it, but Julian, essentially, if you look at the fraud typologies in trade finance in the recent years, there are a few, but I think the key one that stands out, a consignment or a cargo is multiple financed at the same time, and clearly, when it comes to the surface, then not all parties are going to get paid. So what we started off with is, how do we kind of detect that? And if we are in that space because of the inefficient flow of original documents, the industry has moved to copy and substitute documents, which are not title documents. And when you finance on the back of that, there is that inherent risk in the flow. For example, as banks where we have original documents, we have seen very little fraud really. So with that context and a high profile fraud, for example, that happened in Singapore, me, Sriram, and a few of us got together, including Samir, and said, and we got a few other banks involved. And we said, look, if a bank were to detect or have an ability to detect before financing a particular cargo, how would you ensure that it is not already financed by another bank in Singapore, for example? And that's how the concept was born, and Sriram kind of walked through it. And in terms of the future steps, the roadmap that we have in mind is how do we build other like authentication itself, working with Lloyd's or TradeLens or the Maritime Bureau. How do we in the end state probably have an AI engine, a fraud detection engine, such that even if it is not duplicate financing, this engine could throw out a fraud risk with a particular transaction based on the X data points that a bank is submitting into that registry, because over a period of time the registry will have enough insights. So that's the plan, and we are right now working with the Association of Banks in Singapore to see how we can make it an industrial scale utility in Singapore, and then obviously hopefully go beyond the borders and make it a global utility.
Yeah, it was a very good collaborative project, Julian, when I look at it, so the need was there, and, first it was like 12 banks, then it increased to 22 banks, and then by the time, we completed our testing, it was around 35 banks altogether. The need of the hour was to find a way of how we can share and collaboratively work together on shared information, but at the same time keep compliance. And I should remember we have several meetings with MAS and Enterprise Singapore and different groups giving us guidance in terms of this project. And then when I look at it right now, I think this can grow, Sriram, correct me if I'm wrong, towards a trade credit bureau trade finance credit bureau for Singapore. So this was an amazing initiative, which drives across to a large initiative, trying to bring together, more functionalities into it. So on the base, maybe Sam and Sriram from, maybe if I use a technology stuff in here, when we started, it was like any other project, so it started with miniature requirements and, trying to do comparisons, and then it moved up, so we used a combination of algorithmic machine learning on top of blockchain to deliver the final result. So the blockchain used to carry each customer's data for a bank in a specific node, which is not shared with a different bank's node, so that DBS information is never, seen or shared by Standard Chartered or ABN AMRO or RAB or any other banks which comes into play. So these were nodal networks in Hyperledger, and then you draw the data over at the time of runtime, read across to it, and then run scenarios in terms of fraud to give the results out. So a very interesting architecture, from a technology perspective, and I'm sure UOB and OCBC and other banks, came and joined and supported the whole collective effort. A lot of product guys and ops guys, and so at the end I was just checking it. We had around 95 guys getting into the call. So during COVID times, so it was an amazing project. It was a good experience. So. Thanks to have brought it up today. Yeah.
That's great. So
yeah.
It sounds like it was quite a collaboration to get there, right?
Yeah.
Yeah. Indeed.
A lot of different banks.
Yeah.
So
I know I was saying, Julian, and banks are very simple organizations. They like to collaborate. So.
We've been accused of many things, but never that. But we'll take it.
I'll make no comment on banks. So I think you mentioned, Sam, that obviously this is going to be going on here in Singapore, but obviously trade is not. I think you talked about islands, right? But obviously think about trade finance. We'll make sure we don't have islands. So how do you think this will go global, or what kind of process do you think it will happen? Will it replicate what Singapore is doing? It will be an ASEAN, or what's your thoughts on that?
So it's a good question, and I don't think we have a conclusive answer. Of course, we all agree that it has to be global, and if not global, because the key risk is in the commodity segment, it should at least be in the top 6-7 commodity hubs, because that's where all the commodity financing happens, right? So Singapore, Hong Kong, Geneva, UK, UAE, US, and New York, right? China. So at least it needs to go to these markets. Now, what shape and form it will take, etc., is a bit unclear at this point. So what we are doing is obviously doing advocacy and socialization with the various industry bodies. So, for example, BAFT and ICC has already kind of seen this. And the reason we are working through the ABS, the Association of Banks in Singapore, is exactly that, such that we can probably then replicate it with the ABs in the other markets as well. So that's a plan at this point, but the proof of the pudding is always in the eating. So we can solve world hunger, but let's start with Singapore, and let's at least get it up and running here, working through the ABS, and then we will see how we can link it to the other locations. And one easy way could be that at least for the participating banks in Singapore, and there are many foreign banks here, including Standard Chartered, we can look at how we potentially get our own branches in these other locations to also start inputting data into it. So at least it starts growing out in that respect. But yes, the intent is to go beyond Singapore, at least to the 7 or 8 commodity hubs, ideally global if it becomes a standard. But what we want to try and avoid is exactly what we have in the digital platform space today, which is a lot of digital islands, right? That doesn't help it unless it becomes one uniform registry. So yeah, how do we get of an unknown at this point? But the intent really is to go towards that direction, working with BAFT, ICC, and similar industry bodies, and the Association of Banks in the other markets.
Yeah, I just add to that with an eye on making sure that it grows.
Yes.
We're basically creating it as an industry utility. So there are no barriers to entry. So we've done that deliberately. We said that, any bank which is operating as of now in Singapore, but eventually we'd like to open it to every bank to be able to participate and get the benefit of, sharing data and also getting back the benefit of the data shared by other banks. So I think that is the way we are approaching it. Definitely, as Bank says, as Sam says, we are looking at bringing at least our international sites into the equation. So are participating, and that actually only will talk to a good percentage of world trade, because the banks which are in this registry, they are also the main banks involved in global trade across multiple centers. So that is the earnest hope, and let us see how it goes.
Okay, so great. So I'm going to start now, I think, with a lightning question. So we talked about all the challenges of digitalization and the benefits of it. But out of 10, we'll do it out of 10, how confident are you each that we will achieve digitization of trade and trade finance with blockchain for everyone, everywhere, and by when? So who wants to start? I'll start with Sri. Out of 10.
Okay. Actually, my answer is not numerical, it's alphabetical. It's actually N. So my answer is now or never. So what I mean by that is actually it's happening now in many ways.
Yeah.
So we are already digitizing a lot of trade, both within ecosystems as well as across the industry. We are also, not there yet, because the adoption, while all the tools can be there, the adoption is not there. The standardization is not there. So therefore, the never part. So the answer is somewhere between now and never. So the faster we move, we'll get to getting it done. But I think it's something which is doable. We are on a journey, and I think we're making very good progress. COVID has simply made us move simply faster. I think that we managed to move up. People estimate, and we estimate that COVID has moved up digitization efforts by about 4 to 10 years, depending upon which side of the spectrum you sit on.
Okay, so that's now rather than never. Would you give a date when you think it would likely to happen, or is that sometime in the next century?
I think that's an easy one. It's going to happen. I think it's going to happen in this decade.
Okay. Excellent.
But to Poi's point, I don't think it will be universal still. It will not be universal. It will never be universal. So, you can take your pick of the answer. And nobody's going to give you a single answer, because depending upon which part of trade you're talking about, documentary or open account, which part of the ecosystem you're talking about, is it SMEs or is it really large corporates? It's always going to be, it is going to be a long haul before it's universal. But I think we are at the tipping point where everybody, regulators, banks, corporates, fintechs, they're all razor sharp focused on digitizing trade. So I think it will happen sooner rather than later. And within this decade, we'll see a very huge move towards digitization of trade.
Sure, I think thanks for that. I agree with you. I think while you call it now or never, I call it a journey. Now, in the whole history of me doing trade, I've never heard so many companies, so many different banks talking about technology to move trade into digitalization. Now, blockchain is just one of the many possible tools. There are many, many options out there. But at least I can say is that from what I hear from our client base, they are seriously considering their options. Our job is to try to find them the most relevant tools as well as option that meets their needs. It may be a process, as in we may have to start something simple to slowly get them to move away from paper or the reliance of paper. And at some point in time, we probably everything can happen virtually. So unfortunately, Julia, I'm not going to give you a date. Also, I agree with Shriram to say that this is promising time. COVID has given it the right catalyst. It has broken a lot of people in the trade community from our comfort zone or holding on to our papers. So we have no other options but to consider alternatives and options. So I guess blockchain is in the right place now among the other technology solution to be a strong contenders in making it happen for us.
Okay, excellent. So no number from you. Sam, third try.
So I'm gonna give you a lawyer's answer, a lawyer's response rather, Julian. And it depends, right? And what I mean by that is, so I see it in two buckets. Of course, it's a lot more complex than that, but I think open account trade, open account / supply chain will get a lot more, will digitize a lot more quicker. My sense is in the next 5 to 7 years, a bulk of open account finance should get digitized, and not necessarily by blockchain. Blockchain, like Poi said, is one aspect of the technology, but it should get digitized. I.e., we should be not needing paper anymore. A lot of other things need to happen to enable that, but I think that's conceivable. For the non-open account business, which is documentary, I think it will take substantially longer in terms of evolution of legal standards, title, because it involves title movement. I think that is at least a decade to my mind.
Okay.
Yeah. Julian, I have to say it will happen tomorrow, isn't it? Like, yeah. So, I somewhat agree with what Poi was pointing out, and then, it will take its time and it's a journey, but all technologies have succeeded because of value which it generates towards, the customer. And I find the banks, when we started, Sam was saying about the cost of service, so the banks are having a real issue in terms of cost of service for trade finance. And if you look at the profits which comes out of a bank, the margins have come down and it's at a very low stage. So they have to find a solution, by which they can, be more profitable. So there is a problem and we got to find a solution. So that's from the financiers, all over the globe, So now if you look at corporates, they are looking at how to digitize and become more transparent for multiple reasons. It's not for financing alone. Look at sustainability. They need to find a solution, so that they can become much more sustainable in terms of the business processes in all walks of life. It requires a lot of tracking across the value chain. So we talk to lots of customers in metals and mining, agri, different industries. We find that it is the need of the hour, and people are moving faster, but we can't put a date to it. But I'm pretty sure that either trade finance get digitized, or the entire world will find a tokenized model where there is an exchange, and then somebody is going to buy a $10 token, and then the democratization of risk which will happen in terms of securitization, which we have already seen in good part of Chinese lending across to suppliers. And so so this will happen. So it's a journey and it's based on value, and we will see it happening much sooner than what we can imagine.
So it's all about collaboration, right? And moving this, right? And I like what you said, it's not just about blockchain. Blockchain is just one potential technology within that, and it's a myriad of things. It's communities, it's regulators, it's a whole group. So thinking about anybody who's watching this today, right, or in the future, how would you say? Because I think it's in all our mutual benefit for this to happen. Well, how would you say? What's the call to action for people who want to get involved? What would you say to people or organizations or SMEs? Maybe just 1 or 2 sentences each, and then I think I'll wrap up.
So let me go first. So what I will say, Julian, is that there's a lot of networks, platforms, solutions out there, blockchain or otherwise, right? Whenever you are getting into one of them, be very, very clear of what the business case is, whether you're a corporate or a bank. 1. 2, be very clear about the path to production and scaling up, because very often what we are finding is the pilot was all good, and then when it comes to actually production and setup and licensing and commercials, and therefore being able to put thousands and tens of thousands of transactions through the pipe, it is a very different discussion. So think of that upfront in terms of what is a real business case, and if that is clear and it meets the requirements, then do proceed. Because eventually, I think interoperability will happen, has to happen, because I don't think there'll be one single winner or even a few winners in this. It will be a plethora of platforms, but interoperating and handshaking, hopefully on a standard kind of approach in terms of framework and legal standards, etc. We'll eventually get there, but it will be a journey.
Anybody else?
From my side, when we talk about trade finance and we talk about reducing margins. We talk about it because you're all bankers here, right? Many of us, except for maybe Samir and yourself, Julian.
Yeah.
So we always talk about reducing margins and talk about it as it's a bank problem. But the reality is businesses are also facing the same problem, where there's too much competition, there is heightened risk, and there is decrease in margins, right? So, my advice, whether it's a SME or a large corporate, is that you need to find efficiency. You need to figure out how you're going to make your own process efficient. And I think as of now, digitization offers your best route to that. The second thing is that, I find a lot of, especially large corporates, experimenting a lot, but not just dipping their toes and still trying to figure out whether or not. I've been doing it for many years. So to them, my advice would be, start experiencing and stop experimenting. Because we have too many of these POCs which are happening. Let's pick up smaller use cases, but get them done and move forward. I think that is the time, that is the call of the hour now.
To Poi.
Oh, okay, sorry. Well, I'm going to wish for something, probably I'll call it idealistic. Since I'm not the technology gurus, I thought I'll just put it out there for our innovators to solve it. In my mind, to be able to bring the community together, which usually involve a wide group of people, I will call it the first commercial parties, the buyer, the sellers, the banks, for example. And then there's also a wide array of value-added services providers, the shipping company, the insurance, so on and so forth. And the combination will keep changing. So if I can ask for innovations like a magic wand to make the plug and play so seamless that essentially any combination go, I think that will be a big uptick.
Yeah.
Okay.
Yeah. I'll give you back the time, Julian.
Thank you, and thank you. What a great panel. And I think that's great advice to everybody. I think we would love to have the kind of plug and play thing in the future, right? So I think that's a great push. Thank you, Sam. Thank you, Poi. Thank you, not Michelle, Sri. Thank you, Samir.
Yeah.
I think for everyone out there, get involved. Actually, we do have a trade finance special interest group. There's many ways to get involved in this initiative. It is important for all of us, trade and trade finance. So with that, I'd like to say thank you again. Thank you also to MAS and the UBIN channel. And everyone, please stay safe and take care. Thank you, everybody.
Thank you.
Thank you.